was
So,
my hair, and then I just heard, oh, and I'm like, yeah, I can finish
Tyler.
yes.
I'm Adrian.
Nice to meet you.
Good to meet you. Thank you for coming in. I
Course, thanks for having us. Yes, you have a suggestion for you?
Do I have anything that needs to go up here?
No.
Make my job so much easier today.
We begin to hear that more and more.
I mean, it is what it is. I'm here for it.
Like next slide, next
Oh,
slide.
yeah. That's my thing.
and then I woke up at 6 in the morning.
Oh, you're going to look. Give it a read. Okay, so I have to.
How you doing? This is no fair, nothing else.
Okay, perfect. Right. Take your notes.
It was really good. Your bike a volcano?
We walked one. We didn't bike it,
Wow.
but yes. We were on the big island, we walked in.
Funny. I use the word volcano. I immediately go to super old, not active, not doing anything.
Oh, no.
Yeah,
Thank you.
Makes it like there's smoke coming from the ground.
they're live.
Okay.
Yeah, that's- Okay.
Uh,
So it's a good trip. Flight was good.
Oh, yeah, both ways. We had no issues. I know.
Wow.
So that's it. That's driving me crazy.
It's better than anything that I would have come up with. We can call this the pre-meeting meeting, Adrian, is that all right?
Yeah, I'm okay with that. So, thank you to everybody that's in the room already. I'm gonna take all the chairs that are on the back, and get rid of them. They're going. Thank you guys for joining us. Miss Shannon, this was a special request from Shannon based on some situations that she has encountered and needed to sort of have a deep dive on, which I totally, can get that. I appreciate her feedback. I appreciate her input on what you guys are facing out in the industry. And, so she recommended that we bring in, Tyler. Tyler is with Deets and Fluid. And sort of came to us through a connection of, Rob at Keller, right?
Yep.
Yeah, great. So I'm gonna turn it over to them, and if you guys, have any questions, I think they're gonna be a great resource.
Well, thank you. And clearly I didn't mean to push it to a start, but at the same time, if we're all sitting in a room and it's quiet, it gets awkward very quickly. So, at least for me. My name is Rob Bryan with Guild Mortgage. Shannon and I have been partners, somewhat of a team for some time, and I've been doing what I believe to be a good job for people when it comes to financing and therefore insurance as well. Tyler's been a great partner to me. And I use the word partner not loosely. He has become a very good advocate for our clients and obtaining insurance policies appropriate to the situation and to their financial benefit. With that, Shannon asked me to bring Tyler in because I understand that there is some pain potentially in some of your situations. So I'll let Tyler introduce himself, and then as far as format goes, all I prepared was notes, a notepad for you. I have pens. We've done presentations before, but they always just turn into scenarios from you guys. So we thought we'd just fly right into that. With that, Tyler.
Yep. Thanks for having us. We appreciate it. Like Rob said, we've worked together for a pretty good amount of time. Since I've been in Pizza Fluid, obviously we're an independent agent. We write with a number of different companies, which gives us a lot more flexibility. I had worked At State Farm previously, it was a good experience, but it's a captive agent, so State Farm writes State Farm. And there's not, in some instances, as much leeway, so I know you brought us in largely to talk about post-settlement issues, someone sells their home, stays in it for another couple of weeks. I can tell you, when I was there, that would have been just a no with State Farm. They did not have a program for it.
It's still in it.
I think it is, yeah, I think it is, but we experience this a lot, in our office. I think generally in insurance and just in life, when like insurance companies are starting to see a need that this is happening frequently, and there wasn't an option for a pretty good amount of time. What has changed largely, where this sort of started, is Airbnbs and home sharing and things like that. The insurance companies were developing an endorsement essentially. Short-term endorsement, whatever that means, it's different kind of based on everyone's guidelines, but the shortest I would say would be 30 days, some to 60, 90 days, as far as having the home sharing endorsement that we can use for post-settlement issues. That's not how it was developed, but that's how it's able to be used, so that when I sell my house to Rob and rent it back for 2 weeks, you know, Rob's gonna take out a homeowner's policy on that house and have the home share endorsement, because I'm living there and he's not living there at that point. So, you know, when we first brought this up, I looked through all of our carriers. I think of like our probably 10 or so most popular carriers. 7 of them have some type of endorsement that can be applied to this situation. So it's not, on that side of it, it's not nearly as difficult as I think it needs to be. And this is kind of a new topic, really. You know, previously, I don't think insurance companies were as conservative or picky or whatever. Like, you could just write a homeowner's policy, have someone live there for a couple weeks, and no one really looked at it. But, you know, you guys know, in many ways, the insurance market is really tightened up, with underwriting and guidelines and things like that. And I think that's what brought this on. But there are workarounds that we have, you know, we frequently use and are able to write policies for, you know, folks selling homes and staying there.
Tyler, do you have a ballpark as to like how expensive those endorsements are? Are they hundreds? Are they thousands? Are they?
Like $50 a year. It's
So nothing.
monetarily, it's really irrelevant.
Okay.
It's $50 a year.
It's like $12 some pump.
Right, right. I mean, if it's at all a concern that someone might be renting a home back, I mean, it's, you know, a couple of dollars to put on the policy. So it's really a pretty easy solution. We would remove the endorsement once the previous owner is out of the house and they move in. There'd be no reason to keep the endorsement on, but I mean, it's not as problematic as it was. So, how often are you guys experiencing this where someone is buying a home and not living there right away? Are you having like big issues with getting policies and closing, or?
I have,
Okay,
yeah, and I've had people, and they're staying less than 30 days.
yeah, right.
But
Right.
they call your insurance carrier and see if, you know, you can keep your homeowners and do something like that way, or if you have to get renter's insurance, and they're like, we're not giving you renter's insurance unless these people say that it's acceptable on their homeowner's policy, and it just became this spiral, and that's happened to me multiple times.
How did you get to, just for my curiosity, how did you get to closing and get through that? Between insurance and mortgage and things like that?
Honestly.
Yeah.
They just didn't get the renter's insurance, and they
Gotcha.
just kept the other people had their homeowners, and we hope that nothing
Yeah.
happened,
Okay,
which is not
not
safe.
ideal.
Yeah,
Not-
not safe.
You're a gambler. Yeah, you're right.
Well,
It's all
listen,
fine, yeah.
I said, what do you wanna do?
Yeah, it's all fine until a claim happens.
Don't play. Yeah, yeah.
Okay.
Rob, from your perspective, having an endorsement, not having an endorsement, you don't care, it doesn't do anything to the buyers. by having that endorsement.
That's great.
Okay, so and just so I'm understanding, because might be in this slow learner group
Sure.
today. You're representing the buyers. The endorsement goes on the buyer's policy. Right? That $50 goes on the buyer's policy.
Correct.
Yeah,
The
buyer takes
agent.
ownership.
Because they own the house.
Yeah.
Okay,
What really should happen is the seller should get a renter's policy
right,
for that
on the seller's.
3-month, 2-month period. They should get a renter's policy at that location
So as
to
long
give them coverage for their personal property, essentially.
as long as the buyers have that endorsement, there shouldn't be any issue with them swapping their homeowner insurance over to a renter's policy.
Correct, yeah.
Because I had the same
That's no
issue
issue
that
at all,
Shannon had, like,
Yeah.
the seller, like, is trying to switch over to a renter's policy and they're giving them all kinds of trouble.
That doesn't, like, that to me doesn't make sense, like, a renter's policy is so simple, it gives you essentially 3 coverages: personal property, all your stuff, liability coverage, and gives you loss of use, basically. Covered claim, can't live in the house anymore, you go rent something else until it's livable. Like, they're the easiest policies to write, they basically need no underwriting, because the risk is so small. Like, all the risk is really on the person who's buying the house.
Yeah.
Because they're insuring the property, the home.
Yeah.
I really can't think through why that would be an issue, swapping from like the homeowners to renters. We just cancel the home to write a renter's policy.
Yeah,
I think it's
well,
pretty
it
simple.
was because the homeowners didn't have the endorsement you're
Okay,
talking
gotcha.
about, so they're like, you have to prove to us that the homeowners. Yeah, that State Farm is
Yeah.
okay with you renting it, and that's where we had the
Okay,
problem.
so we don't really, on our end, from an insurance perspective, we don't have underwriters saying, we want to see the landlord's homeowner's policy or rental policy.
Okay,
They just, our renters applications are so simple. It's, name, date of birth, all your demographic information, address, how much coverage do you want? I mean,
Yeah.
literally, it's how much contents coverage do you want, how much liability, and, a couple endorsements. Like, there's no real underwriting to it.
Was there a difference, like, if they're asking, like, they're explaining the situation,
Yeah,
what they're
sure.
doing? Or if they're just saying, I need a renter's policy, like, should they just be asking for a renter's policy?
I
to
don't
begin with?
think there's a
Like,
need to explain the situation, but also I don't think that even when you explain it, I don't know why there would be an issue.
yeah, I mean,
You don't own the home anymore, so you're not gonna carry a homeowner's policy. And you need coverage for your belongings, your contents or personal property or whatever you call it. I don't know why that would be an issue, really. I really can't wrap my head around that.
I think if I'm reading, we're a safe space.
yeah,
In order for us to truly provide options, we need to truly understand the situation. So although, I won't ever ask you to be careful. Cause it's the only way for me to really get the meat of what the problem is. So in the event that you're asking questions, you're not gonna hurt yourself by providing more information.
yeah. Well, that's what, like, I mean, I feel like my client, like, when she called to get the renter's policy, if she would have just told them she wanted the renter's policy, they probably would have just given it to her, but because she explained to them what she wanted to do and what's happening, they're like, well, we need this information, we need that information. She's like,
So what was the pushback from an insurance agent perspective? Did you get that from your?
I didn't know the whole-
Not really, yeah.
but she just said, they're asking for all this stuff and I don't have it, and
Yeah.
like, this seems like more of a trouble than it is to just, because it's literally 3 days.
and you
Right.
didn't do your
Right.
post-settlement as a
Yeah,
result. You
she ended up just
Yeah.
moving out, she's like,
Yeah.
I don't wanna deal with it, so
Yeah.
she moved out, like, and
Yeah.
it literally was 3 days, so she's like, whatever. it
But
doesn't
this
matter,
was
but-
recent.
Yeah, this
Yeah.
was just last week.
Yeah, and mine was that she did the same thing, she explained, and they said, and it was somebody that wouldn't have put an endorsement. It was a big firm that's, captive, and they would not have put an endorsement, and they said, this isn't legal, use the word legal, and went that route.
So I can tell you when I was at State Farm, the only way we could handle it would be, and this does create an issue of closing, probably more so on a mortgage issue. The person buying the house would have to write it as a rental dwelling policy.
Which he can't do.
Correct. So that's the issue we had at State Farm, because that's the only option they had.
Yeah.
That person would have to, the buyer would have to write it as a rental dwelling, and then rewrite it to a homeowners when they moved in.
Right.
And And that does for sure create issues of closing.
So you just have to go through different carriers that have these invoices.
Carriers all have different appetites, what they want to do, and eventually most of them respond to the needs of, hopefully, the needs of the public, and this is an issue. Most of our carriers are able to do it, so it's really, from my perspective, not a difficult thing. Obviously, you guys have gone through some stuff in this situation, having trouble getting to closing or even getting it closed, maybe some issues, but there's definitely ways to do it, and carriers that can provide that.
How much do you recommend in liability insurance? Because that's like somebody slips and falls down the steps moving you out, right?
Yeah, so my recommendation on liability insurance, I'll give an example why. For homeowners or auto, I think you should carry enough liability insurance to cover your assets that can be taken from you. So most people are not covering that amount. So here would be my example. I have a 5-year-old kid. Let's say we get into an accident driving down the road. I can no longer work and provide for my family. I have a 5-year-old. What's gonna happen is we're gonna see your auto policy. Let's say you have $100,000 of liability. I'm gonna say, $100,000's a lot of money, but it's not a lot of money when you're talking about I can no longer work and make an income. I can't provide for my kids. My relationship with my wife's gonna be different. And, you seem like a great lady, but I'm gonna hire an attorney and they're gonna do an asset check. And, they're gonna see, that she has a lot more assets than $100,000. We're not gonna settle for 100. When you go through an insurance liability claim, before the claim is settled, you have to sign that you're not going to sue the liable part. So you can't really do both. You can't take the insurance claim and sue them personally. You have to make a choice. So if you're not carrying like significant liability that can protect your assets, you are exposed there. There would be a big claim that someone's gonna say, I'm not gonna take the $100,000 from State Farm. I'm gonna come after you personally because I no longer can make an income to provide for my family. So it's not a number. I think that's sort of what you're looking for. The answer is, I think, enough to cover your assets can be taken from you. The other part I'll say, liability coverage on insurance policies is the small, financially speaking. To go from 100,000 to 300 on a home, let's say, it might be $15 a year. It's such a small amount of money. To me, that's not the area to save money on. And I would say the same thing with auto insurance. Like the liability portion is still the cheap part of the policy. I would rather have someone carry higher liability limits and then a higher deductible. And, the total premium might be about the same, but I can bounce back from writing a check for $1,000 to fix my car versus $250. I can't bounce back from someone taking my retirement because they can't work anymore because I'm at fault. Like, is it inconvenient to have a higher deductible? For sure. I would rather have low ones, but at the end of the day, like, we only have so many dollars we can allocate to insurance. I would rather allocate them and kind of protect myself from the big stuff and handle some of the small stuff myself, or have more out of pocket to handle the small stuff generally. But I think the real answer is enough to protect your assets. For me, it's a lot about having a conversation with people. I sort of have a checklist that I go down through when looking at policies, to make sure we're covering whether auto or home or business, to make sure we're hitting those needs that they have. Because, most people, me included, like when you get your policy, you probably got a similar policy that your parents had, and then you switch companies, and they probably match your limits and wrote the same policy, slightly cheaper. That's why you switched. And it's like, our needs change. And it's the same thing like with policy reviews for me. We try to review with people, not all the time, but every couple of years we want to have a policy review. And I try to tell people if you have like a big life change, get married, have kids, come into a large amount of money, buy a business, things like that really change your you know, your life, things like that, like that's a time you should talk to your insurance agent and kind of review and see, do we need to make any adjustments? Are we good here? Things like that. But I mean, I mean, if you're looking for a number, it's sort of hard to give you one, but I mean, it's such a cheap part of the policy. I would encourage everyone to bump up liability, you know, to go from 100 to 500 with most companies is $30 a year.
Yeah.
You know, you're going 5X on your, you know, liability. I think it's a good use of insurance dollars to me.
Can we talk roof?
Yes.
Just real quick, we want to make sure that as you bring to us challenges, that solutions are created. And when Shannon mentioned to me that that you were having some insurance issues, Tyler and I candidly don't really run into challenges because of the availability of the providers. So I want to make it clear that, you know, Tyler's not a yes man. Tyler has experience and products to help us. And he's been a great partner to me. So when it comes to the questions that you're asking, these are questions that I know that he's having and has had for years that I didn't really ever get to be a part of until you asked me.
Cool.
All right, roofs.
Are you seeing problems with getting insurance on older roofs?
Yes, to some extent. For sure, roofs over the past maybe 3 to 5 years with insurance, probably the number one question we have to ask people when we're looking at writing homeowners policies. Many of our carriers have gone to a 15-year limit for new roofs, for sure. We have a number of carriers who go to 20. We have a few that'll go to any age really, as long as it's in reasonable condition. From a personal perspective, I think the 15-year roof thing's completely ridiculous. I just do, especially in this environment, which is generally pretty mild, you know, minus our last 2 to 3 weeks of weather, but like generally it's pretty mild. You know, roofs are like a 30-year roof around here lasts 30 years. It's not the heat of Florida, you know, things like that. The other part to me is if a hurricane comes through, it's gonna blow off a 25-year-old roof or a 25-day-old roof. It doesn't really make a difference. The roof ages where it came about is really trying to minimize an insurance company's exposure for interior damage as a result of a roof leaking. So like if your roof leaks, there's not just leaks, not weather related. There's not gonna be coverage for the roof. There's going to be coverage for the interior damage, which can be very substantial or more than the roof in some instances. I mean, you guys know, like, the biggest enemy of a home is probably water in general. So that's really where it came about. We have not had issues with writing policies and getting people to closing for roofs. It significantly does limit our carriers, and the price isn't always what we want, that's for sure. What we've been seeing recently is, I mean, probably within the past 3 to 6 months as we've been meeting with carriers, they're sort of loosening up on the roof requirements because they're not writing any policies. So we've seen some companies go from 15 to 20 years. And they're kind of the give back, I would say, is that they're increasing deductibles. So to use an example, Donegal has gone to 20 years on roofs. They were at 15, but they're requiring a $2,500 deductible for wind, hail, and roof damage. Is it ideal? Probably not. However, you know, it gets someone a policy with a quality company. It gets them to closing. If you have a 30-year-old roof, my guess is you guys are like probably telling me, you know, you might want to start thinking about budgeting for a roof. The home inspector is probably telling them the same thing. But yeah, we're not at a point where we're not able to write policies. They're not quite as preferred or priced how we would want them to be, but we're getting people to closing for sure.
And are those policies requiring people to replace it within 60 days or not all of them?
We are not seeing that. So if we have a roof, let me ask a couple of questions. Do you guys, when someone does a home inspection prior to purchase, what are you guys seeing from the inspectors on roofs? Are they saying like, 'cause, you know, you buy a house, you live in it for 8 years, the roof was on there. You probably don't, like, there's a question mark, like for the roof age. Are home inspectors giving ages or lifespans or anything like that, or? what do you
Nearing
guys
the
see
end
there?
of its useful life, is that what you guys usually
Is that
say?
what you see?
Near the
okay.
end of its useful life? Yeah,
What about for a roof
Yeah,
that's decent, just like it's within its lifespan, that kind of what?
I think that's the kind of language that we get.
Yeah.
You know, and then
Yeah.
they'll recommend it, you know, if there's more questions, recommend getting a roof
Yeah.
expert or roof.
Yeah, if
inspection
there's-
Separate.
Yeah, if there's cracks and popping and
Yeah.
stuff like that.
Then go get a roof inspection.
Yeah, I mean, I've talked to some inspectors, I mean, the reason they do that is liability.
sure.
If they say you have 5 years left in your roof and 6 months from now my roof leaks. There's a liability where I can say, you know, I wouldn't have purchased this house if I knew I had to write a check for 20 grand for a new roof in 6 months. And that's why they're not giving, this roof has 5 years left, this roof has 2 years left. And, you know, we also don't know, like, we think it has 5 years left, but it might not. I mean, that's why they're giving the nearing the end of its useful life or appears to be in good condition kind of stuff. So we see the same thing. One of the things that's been really helpful to us is when we go in applications with companies. We said Donegal, so Donegal uses aerial imagery. Most companies do, in their underwriting process. So if a roof is really, really, really in bad condition, we can get an automatic denial based on aerial imagery. It is not perfect. So I'll say, for instance, it's looking at, it's really pretty sharp imagery. But if there's a shadow on a roof from, let's say, a chimney, which would happen, sometimes people are getting like rejections before we ever really got to underwriting. It was like automatic based on a roof score. One of the things that's been really helpful to us is we have access to that now. So as we're writing the policy, I mean, we can zoom into the point of nearly seeing like individual shingles. Like it's really that sharp. So we're able to put people with the right carrier. So if you put someone, every insurance company at this point inspects all new business. That wasn't always the case, that is now. Just every insurance company will inspect new business. Putting people with the wrong carrier is what generates the situation you were talking about, where it's, we write the policy, they come out and inspect, and it's either replace your roof within 60 days or we cancel the policy.
Mhm.
Like, going with the wrong carrier is what generates that. If you're writing with a carrier that has a no limit on roofs, it's not gonna be an issue. Unless the roof is just totally deteriorated, and that's a different kind of conversation.
But
But,
they knew that when they bought it, and were
Right.
planning to replace it.
right, right. Yeah, it's, there's definitely markets for older roofs, especially when they're in good shape. We're not seeing that as as big of an issue. It's just, it might be a $1,500 policy instead of 1,000 or whatever, because of the age of the roof.
I
Sure,
have a question.
Yeah, sure.
If the owners trying to put new shingles on the roof instead of changing it,
Uh-huh.
and they're doing it on their own, is that changing anything with your policy? So if you go out, it looks like brand new,
Yeah,
but they're gonna have to put it down in the seller property disclosure that no, we did our roof, it's just new shingles on it.
Like they didn't take the other stuff
They
off.
didn't take the other stuff
They
off, they
just
just kind
rethink-
of like, they did it on their own, they just put on the new shingles.
On top of the existing.
Yeah.
some carriers have. There's not a yes or no, it's a yes and a no. There are carriers that will ask how many layers of shingles.
Yeah.
And if the answer is more than one, it's a rule out question for some carriers.
Okay.
For some carriers, it is not. There's many carriers that's not a question.
Okay,
Just, is it in disrepair or not?
okay.
How old is it? Is it in disrepair? What's the material? Like,
Okay.
that's the extent of, for most carriers, I would say that's the extent of the questions on roofs. Some for sure, that would be a rule out, and that's where kind of from an independent agent, we have to be thoughtful on putting people with the right carrier. We need to match truly need to match the risk in the carrier. Whether it's, you know, the situations you guys are talking about today that are difficult, or just your vinyl box in a suburban neighborhood with a 5-year-old roof and, you know, white picket fence, like, we have to, you know, there are carriers that handle risk and price the risk differently based on their guidelines and kind of appetite.
How many carriers do you have?
Personal lines we probably write with about 20 to 25. There's probably 5 to 10 that we write probably 80% of our business with that, so somewhere in that ballpark.
And so if we had a client with that needs insurance, a
Yeah,
buyer, we call you directly?
Yeah.
How did we, okay.
Yeah, you would call me directly. I have kind of an information sheet. I would just get the info. We have a comparative rater that essentially we can put all the information in. It uses, obviously credit's a big issue with insurance, whether home or more auto than home, but it uses generally, they kind of estimate an average credit score, whatever that number is. So it kind of directs us where to go. And the other thing is like, we just know based on the risk by experience and also their guidelines, kind of where to go. That's gonna be the best option for them. But yeah, I mean, the contact point is us or me, and then I kind of go to the carriers from there.
Somebody once told me if you get denied because of a roof, then that gets signaled throughout the whole insurance community. Is that accurate? Like, could that cause us to have problems?
Like denied writes a policy and gets canceled, or denied that they're not going to accept that.
They're not going to accept it.
That's not an issue. If you get so I'm going through one now where someone submitted like 3 claims in like 30 days after a home. That person, they sent out a cancellation, said this rent just obviously not what we thought it was. And then they inspected and it turned out it was it had some issues that we weren't able to see based on, you know, MLS listings. We just couldn't see it. We have a carrier for them. We are gonna rewrite that person. The price is gonna be a lot more than what it was, but he also filed 3 claims and had a cancellation in like 30 days, so. But we were able to write that person with a policy. It does not trigger anything like if you're canceled with one company, or sorry. If you're denied coverage with one company, it doesn't trigger anything in like the insurance system or LexisNexis where they pull like insurance reports. That's not an issue.
So I have a question.
Yeah, sure.
If, a home has had a claim, that goes in the mother
Yeah.
system, right?
Mhm.
And then how long does that stay in that?
So
Like years?
let me ask sort of 2 questions. Would it be you have a claim in your home,
No, it
or
could be
you buy a house?
buying a
previous
house,
owner had a claim?
Previous owner
Okay.
had a claim
It will show up in the system for 5 years.
5 years.
And it's part of the rating system where it will show, but it doesn't affect eligibility. It
Okay.
can affect pricing depending
Sure.
on the carriers and kind of their algorithms, which
Mhm.
no one really knows exactly what they are. It can affect pricing and to some I had an initial real pushback with underwriting, like you have a water claim or 2 water claims in your home. I buy your house. Why does that impact my rate? So I had this pushback with underwriting. When they explained it to me, which does make sense to me, if you have 2 burst pipes in your house and you don't replace all the plumbing, you're likely to have a third. That's just the reality. So that's why that can affect pricing, because the house I'm buying from you that had 2 previous losses, I'm likely to have a third, and that's what they're charging for.
And I think that's a
It's
good,
not affecting eligibility.
but then that's probably a good question to ask our sellers as we're preparing to list a home. Have you had any claims? Because it might affect the insurability for someone that's,
It's on the seller disclosure.
I think it's on there.
It's the last page,
yeah, it might be a good question just to follow up, because sometimes they,
because sometimes they lie.
yeah, if you wanna call it that.
Yeah.
Yeah, but you can-
Hey. You mean like when I go through a whole checklist and ask about claims and they're like, never file a claim, never file a claim, run reports, it's like.
Is this you?
Like you filed 5 claims in 3 years on your auto. What are you
no,
talking
But
about?
those claims also follow the person who filed
They
it,
do,
right?
yes.
So if I had a house fire and I
It will
sell,
follow you.
it kind of dings the house a little bit, but it dings me too for the next one.
Yeah, it really dings the policyholder more so than the house.
Oh.
It almost shows up on the house. It may affect pricing a little bit, but really not significantly. It really shows up as like almost an FYI, there was a claim here on the house, more so than like eligibility or even really significantly pricing. We don't.
So that's 5 years applies to the policyholder as well as
Yeah.
the property.
Yeah, policyholder for sure, that claim follows the policy.
We have a lot of houses in Camp Hill and Carlisle
Yeah.
that are 1900s homes.
Mhm.
And as far as we know, the wiring, I mean, like, you can't see any knob and
Yeah.
tube anywhere. As far as we know, it's replaced, but they haven't ripped over every single plaster wall.
Yeah.
Can we still get insurance on that? Do we?
We only can go with what we're told. So if you buy a house and they tell you there's no knob and tube in the house, and then I say, hey, is there any knob and tube in the house? And you say no, then there's not knob and tube in the house from an insurance perspective. Obviously, there's an integrity issue there
Right,
on everyone's end, but sometimes we just flat out don't know. Like, you know, when the plumbing in your house was replaced?
right, no.
I mean, I don't in mine either. Like, I have a general idea whether it was original to the house in 1958 or whether it's been replaced in my house, probably about 1995-ish. But, you know, at some point there has to be kind of a best guess and integrity. It's sort of to some extent, it sort of takes me back to the roof issue. Between the aerial imagery, like, most people don't know when their roof was replaced unless they've been in the house for a long period of time. We're really able to take very estimated guess and do it with integrity because we can really zoom in and see a roof. The other thing I'll say is we're not idiots. Like, say it's a 30-year roof and it looks like it's in good shape. We're not gonna say it's a 16-year-old roof, which rules out 50% of our carriers. It's a 15-year-old roof because there's no difference between a 15 and 16-year-old roof.
Yeah.
Except one's eligible and one is not. And I feel like we can do that with integrity because we can zoom in to the point and say, this roof, it looks like it's in tremendous shape. We can see individual shingles if that's specific. Like, we feel very good about saying this, because we're guessing a 12-year-old roof and 15-year-old roof, things like that. Because, you know, the reality is most people don't know the answer. It's not that they're lying, it's that they don't know.
I think you run into that, like the states. Yeah, I don't
All
know.
the time.
All the
Yeah,
time. And
yeah,
they
I don't
truly
know.
don't know.
Right, all the time.
And they have 47 years worth
Yeah.
of records, if you wanna find it, but I mean, you can't
I mean,
find it.
there's really 2 issues, and you talked about both of
I'm
them.
doing that
One
now.
is that we wanna take care of our customers. And we wanna make sure they're not writing a policy, closing on the home, and then they're canceled right away because it's a mess.
Yeah.
And the other part of it, and it's just the truth, is we're all in sales. We wanna get them to closing because that's how we get paid. Like, that's life. You know, so I think really people don't know, but we can use some tools we have now. I think and do it with integrity and say this roof has plenty of life left. We can put it with these carriers and feel good about it. When they inspect it, we're not gonna have an issue. Or we can zoom in and there are going to be times where like, this looks kind of rough. I think if we put them with, we end up putting this person with Donegal, they're gonna come out and inspect and cancel it.
Yeah.
So we, you know, we have enough experience and enough tools, we can match people with the right carrier and take care of them for closing and kind of down the line.
Are there discounts if it's a brand new roof?
Not if there was a claim filed.
Discounts, no, but it does impact pricing. So,
No.
yes and no.
Yeah.
Just yes and no. It's not like a discount button, but if you put in, like when we're quoting your house, if I put in roof year 2020 versus 2010, which would still be eligible with everyone, it's 15 years. The house with the 2020 roof would be priced better, for sure.
What about pools? Diving boards, those kinds of things.
Carrier specific, we have carriers that are very willing to write pools with diving boards and no fences. We have carriers that will write the policy and make us exclude the pool from liability, which I would recommend against. I don't think that's wise at all. But at some point, our customers have to make an informed decision on what they want to do. And we have some carriers that will just say, no, we're not gonna do a pool with a diving board and no fence or anything like that, but we definitely have, there's programs for that for sure.
Is there a difference between a diving rock and a diving board?
For what?
Diving rock,
One
Diving
fancy.
rocks
I don't know.
that don't.
I don't know. I
Is
don't
that
know.
like cliff diving in your pool?
So you have like a nice pool with like an outdoor water feature.
Yes, and that it's a diving rock and.
Let me ask a
Yeah.
question. Is the rock designed for diving?
Yes,
I don't know the answer. I can find that out and ask some
You
underwriters.
could say your garage roof is designed for diving too. That's what we used to do.
Yeah.
They asked about trampolines and pit bulls too, right?
Oh, yeah.
You know?
Yeah.
Yes.
Same issue. There's a carrier for almost every risk.
Oh, flood insurance. I had two properties down in Shiloh, Cleveland,
Uh-huh.
and there was one write-up. There was only one company that covered us.
Tell me about what the policy looked like when you got it. How much coverage was there? What was the price?
And
I'm sort of curious.
tested on everything. That was structural, wasn't kind of check.
Yeah.
It was a rebrand.
Floods every
Okay.
2 years.
So just for, I'd say what's the basics, and
I think a lot of, and Rob can probably speak to this maybe a little better on the mortgage side. Most flood insurance policies are going to go up to the limit of the flood, I think. I think a lot of our lenders, that's their requirement for flood insurance.
Well,
I could be wrong about that, but I think that's generally what we see, versus a homeowner's policy that's going to be a replacement cost. So house burns down, we have to rebuild it from scratch. Like that's the replacement cost, what a homeowner's is built on. Most flood policies are really loan value because they're required by the lender based on location for floods. But we have a number of options for flood insurance policies. It's so, as you would expect, it's so location dependent on the price. I mean, if you're in a bad flood zone or you're right on a creek, it's very expensive. It can be 2 or 3 times a homeowner's policy. It truly can. If you're in an area that's not a big flood risk, but for whatever reason you want a flood policy, and it might be $300 a year. I mean, it's very inexpensive. But it's so location dependent.
it's thousands.
Yeah,
a year.
yeah, that's not surprising.
It's in the city,
That's not
you know, it's
surprising.
mandated.
It's also become a lot easier because we're now no longer requiring federal, like we're doing private. Like there were times when loan programs required you to do the federal insurance and then it was, guys,
Yeah.
now that we're in a competitive environment, it's much better.
We have a couple go-tos, I would say, on flood policies because they tend to be priced better, but we have a lot of carriers that are right.
And elevation certs are important, how much the property's in it, it's super property specific.
Yeah.
Like the County of Gwinnett is hilarious, like, as curvy as it is, house A, no, house B, yes.
Yeah.
They're 20 feet apart.
It's insurance, so it's so location dependent. Like, if you put your house on the beach in Ocean City, Maryland, it's gonna be a $10,000 policy versus $1,000 in Campbell. It's just so location dependent. The flood policy more so than any of the Yes.
So with the knob and tube, so if you have a home that has knob and tube in the wall, but they've taken it out where it was exposed, and so there's new wire where it is exposed, I know that I had a situation where we had trouble, the buy side had trouble finding insurance. They finally found a carrier who was willing to do it, just with the cost was there.
Yeah.
But is that something?
We have it is a very limited market for knob and tube. We do have carriers that will write knob and tube, but as the price is there because the risk is high based on fires, really. We have. This is a very abnormal situation, but we have a guy that has like a 10,000 square foot historic home that still has novice tube in it. Has a rebuild cost of, I think, $15 million. I'm pretty sure it's like 15 million. Like this is not like your.
Yeah.
This is the one-off, but he has knob and tube in that, and like, there's literally one carrier that's willing to write that on many different levels, the age, the cost, things like that. It's with Chubb, which specializes in kind of high-end homes like that. Like, for him, it would probably cost less to rewire his home than keep it knob and tube and. Or at least the break even for him might be a couple of years, 2 or 3 years, and his house is a temporary. Like, in reality.
I think the challenge is they rewire what they can get to.
That's right, you don't know what's behind.
But
the
you
wall.
don't know what's behind the
There's a
wall.
lot of homes, mainly 1900s homes in the city, row homes, that we don't know what's behind the walls.
No idea.
And we can only make our best guess. Like, that's just the reality. In claim time, I don't think it's an issue if, you know, all the wiring exposed is not knob and tube. You know, everyone's asking, is there knob and tube? No, documented it. No, there's not knob and tube. We don't know what's behind the wall. We have to make our best educated guess. And, you know, represent the truth, whatever that is. But we definitely have carriers that handle knob, that would take it knob and tube. But it's-
So-
yeah.
If a policy is written based on the seller saying there's no knob and tube, you asking, they say
Yeah,
there's no.
right.
A policy is written based on that information. If there is and a fire occurs, is that claim gonna be disclaimed?
Yeah, I think there would be coverage there. I really do. You know, it's a claims issue for sure. I think if nobody, like, if people legitimately don't know, I think there's a real case to be made that, you know, this was. Everyone wrote this policy in good faith, essentially. We can't know everything that's behind the wall. I mean, I think you'd be all right there.
And they're not expecting you to hire an electrician to go
right,
around and
right.
check every single outlet
Do-
in the,
Here's
that's the feedback I was given by
home
another carrier.
inspections. Are they recognizing knob and tube? Like, I buy a house from 1900. I don't see any knob and tube. I know they're not tearing walls open, but are they speaking to that issue in a home inspection?
You're supposed to be.
I think so too. I mean, I think you can always hang your hat on. What more do you want me to do? I bought that. We asked the people, they said no. The home inspector said no. Like, I think in good faith, we wrote policy. Like,
You can tell a lot from.
it's not gonna be smooth, like, it's not gonna be a smooth claims process, I can tell you that. There's gonna be some back and forth for sure, but, you know, I think a situation like that, I think you're gonna be okay.
And in the event that our people write with you and then have a loss,
Sure,
can they call you to start to facilitate that?
yeah, either way, so
Okay,
we can take the information and submit that. And then, you know, they're primarily gonna handle their loss with the carrier, the adjuster. We're able to kind of intercede there if things aren't going well for whatever reason,
Mhm.
or not getting whatever feedback they're looking for. They can also call it in directly to the carrier. The one reason I would sort of recommend that is we don't know every question they're gonna ask. And every time we call in a claim, they call the customer at the most inopportune time. Like, it just just happens that way. And it's like, they call when they're at work, then they call the adjuster back and they're on a meeting, then they call. You know, so it like drags it out more versus, you know, they called in directly to the carrier. They can give all the information in one shot. There's really not a lot of back and forth. There tends to be less, the feedback I've gotten tends to be less of a hassle to do it that way. Because they're gonna give me the information, then at whatever point the adjuster calls them, they're gonna ask them the same questions. They're gonna have to give them the same information again. And the back and forth, like the phone tag can be an issue. So, I mean, I think it's often easier because they can kind of call, most carriers now will take claims either online or 24/7. doing it online is really a pretty easy process too. It's like enter name, enter policy number, date of loss. And they have, you know, whatever, 20 questions about what happened. It's really a pretty easy process and they can do it kind of there. I would say the times to call me directly is if it's like an urgent thing. Because I can better guide them. Like, if it's a minor thing or it's not urgent or time limited for whatever reason, calling into the carrier is probably the way to go. If it's like a major, you know, my house is on fire, you should call the fire department, but like a pipe burst and there's water coming out like right now, like if you call me, I can sort of guide you like, okay, water shut off, one. You know, and kind of walk through those processes, because file a claim, this is step one. Although some people do, like, we get these calls, which is like crazy to me. Someone will have an auto accident, they're literally still in their car in the middle of an intersection, like calling in a claim, and you're like, wait, what? We're like, okay, step one, get your car or yourself to a safe place. Step two, make sure everyone's okay. Step three, call the police, like, call me back, like, what are you doing? But like, we get there, like, legitimately, like, in an intersection, still in a car.
As a
Like,
tourniquet's
what are you
being put on their leg by the EMT.
Right, like, what are you doing? Like, call the police.
Hey, does anybody here have Erie insurance? You don't have to answer yes or no, but since June 7th, their system was hacked. And there's rumors, good rumors, it's ransomware. So if you have to file a claim, they're not gonna be able to help you.
They sent out an email on that, right?
Yeah, I didn't get one, but I can just tell you, like, this might be a good time to talk to Tyler about looking for other options. I mean, it's bad.
Yeah.
And yeah.
Yeah, call your
If
guy,
they're
he's
contacting
gonna
you
tell you
and it's the
nothing you can
point that
do.
they can't file a claim.
Then you don't
And
have to-
it's been a long time. It's been a long time.
Because insurance is
June 7th.
only valuable
Yeah.
if they respond to a claim. That's
Yeah.
the only value of insurance is at claim time.
Yeah.
Otherwise, it's just a piece of paper. Insurance is the only thing I can think of that is not tangible and you hope to never use it. Like, that's the only thing I can think of many things that are not tangible. I can think of many things I buy that I don't want to ever have to use. The only thing I can think of, you don't ever want to use it and it's not tangible. And it's expensive, so that's the difficulty of, you know, auto or home insurance or whatever else, but the value of it is the claims time, we don't know when that is. If you could promise me you're never gonna have a claim, you know, it's gonna be pretty easy to write a policy, but the reality is, we don't know, and that's what it's there for, to protect us and our biggest assets.
Tyler, if we worked with you, do you like annually shop among your people to see if you can get us better rates or
So
whatever?
what I tell people generally, because we all have caseloads, when you get your renewal, if something looks off or you're seeing a big rate increase, please let me know and we'll shop it. If you have a major life change, please let me know so we can kind of review this and see if we need to shop or make adjustments. It's really not feasible at any agency in the world to review every policy every year.
Sure.
So I try to tell the customers, you know, if you're seeing something that's off, the other thing is we get reports on increases or decreases, you know, it's, your policy went up 3% this year, seems very reasonable. Your policy went up 40% this year, like, we need to take a look at this one. And the other thing is, like, there are carriers, it's a moving market, it always has been a moving market, so, you know, there are carriers that used to be extremely competitive, like, we wrote a lot of business with them, and now it's like, we don't write anything with them, so like, if you're with one of those, we're gonna look at it, just because we pull reports on who's still with this carrier, because we probably can do better for them, so. We don't do it annually, but we have a couple of checks and balances internally to look at, and then we try to encourage everyone to keep an eye on their own policy in that way as well.
Sure.
I think you had a question back there.
So with auto insurance,
Yeah.
comprehensive claims, how does that affect your,
Pricing
yeah?
is part of the so comprehensive claims, I assume people know this, theft, vandalism, fire, hitting a deer, glass break, falling objects, flood.
Baseball.
Spoken from experience.
Yeah.
Baseball is collision.
Oh, is it?
Well, I guess you could call it a falling object.
If it's, you're
Charlie could call it a
sitting
falling
at your
object.
9-year-old's t-ball game and it flies out of the air over the.
Honestly, that would be like,
After
this is where it gets tricky. So if you're in a, claims are tricky, there's. If you're in a parking lot at Wise Markets and I take my shopping cart and throw it across the parking lot, it hits your car, that's collision. If there's a wind, if I have my cart here and the wind hits my cart and blows it into your car, that's comprehensive. Because what caused the thing was wind. So that's where claims get very much in the weeds.
Mhm.
Mike, did you throw the ball?
No, no,
If you threw the ball, I think you're.
I'm not that good.
That's a
I
different-
couldn't hit the side of a
But
barn.
Comprehensive wise on auto insurance, it can affect your rate. It really doesn't affect eligibility with most carriers. It's not a big. It's not a big, thing in the rating of insurance. I think where it does come in is if there's a frequency of it, like frequency of claims. So if,
Help how many years you get.
I know that. That, yeah, you're right, so I think it's a frequency thing that can impact pricing on comprehensive. And so like,
I'm on my face.
where do you live? Very down. Yeah, I never saw that.
She's got a reputation among the deer.
But, yeah, I know, you're right. But it's also why if you ran into 5 cars, you would have been canceled like 3 cars ago. Or 3 collisions ago.
I've never hit a car.
Well, I know, I'm saying.
That's
if
a
you did,
fearless drive.
But it can impact pricing to some extent. It's really not a big impactor on pricing. The frequency thing, I think even on, did you get canceled by a company or they jacked your rates?
No, they
or-
just take their hair.
Yeah, see, that's generally what happens.
Like, not even
What are
a
you
mile
gonna do?
from my house.
Yeah. I mean, that's generally what you see on comprehensive.
They do, they
Not a
do.
big one. Real, you're a party.
Yeah, like in this area, if you ever look at, not that reviewing your insurance policy is like an exciting thing, but like, if you look at the line by line, like your comprehensive is probably 1/3 to 1/2 of the pricing collision. Somewhere in that ballpark, depending on the vehicle. But like, if you go to, I think I wrote someone that moved in from Iowa. Their comprehensive was 2 times their collision price. Just because, insurance companies are looking at truly like, what are the claims we're paying out in a specific area? Iowa, lots of deer, lots of weather issues. They're having like a lot of hail or sleet stuff, a lot of wind issues, tons and tons of deer. I mean, so it's like their pricing is completely flipped from this area, where ours, like the collisions 2x the comprehensive, so
It's hyper local.
yeah, it's very much zip code dependent. Like the pricing in, I take a pretty good guess, pricing in Harrisburg City is gonna be a lot less than
Philadelphia.
outside the city. And it's not for any other reason other than just frequency of claims in that area.
Asking for a friend.
Yeah,
A
sure.
moving violation where you talked yourself out of the points, but you did get the ticket.
Yeah.
How bad is that gonna hurt my insurance?
I don't know.
Okay.
I don't.
Do points matter though? Points versus just fines?
I don't think the points matter as much as what the violation is.
Oh,
So it's gonna depend how it's put in.
What did your friend do?
Put in the PennDOT, basically. Put in,
I might not have realized that a road was 25 and was going 42.
that happens.
That's not
It
that much.
was a 35 before.
What'd they write your ticket for? I don't know the answer just for the record, but,
I only got a $180 fine.
what was,
So it's
No,
pretty
wait, is it a
what
friend?
did they call it? Did they call it a speeding ticket or just like a
Moving.
A
random
moving violation.
violation?
Moving violation.
I don't know the answer, but that's gonna be better than them writing speeding 17 over the speed limit.
Okay.
I can tell you that.
So I should probably tell my husband. My husband, mine is.
Wait and see what happens. Like, once the renewal comes out, like maybe the overall pricing went down and that brings it up.
I could just act
And it
like I
comes
have
out
no
the wash.
idea.
Yeah,
It's only there for 3 years, it's fine.
It's fine. Thank you.
Just from a mortgage perspective, and trying to pull back your way a little bit. Where's your heart for them? Where do you focus on the conversation with Tyler to say, I'm getting pushback from those lines?
No, good question. One of the critical components of Tyler is that I can come to him for, I'm having a challenge, you cannot make this premium any greater than this amount for the debt income. So there's that. But it's from, we don't like actual cash value. We need guaranteed replacement. You know, but because Tyler knows the mortgage industry almost as well as I do from an insurance component, very rarely does he send me a policy that doesn't work. So, but actual cash value is not great.
Okay, so in that line, just,
Yeah.
most contractors will not go a build project, even repair, beyond 2 weeks. So, I mean, when you're insuring a note for
Right.
$500,000 for a home, and they're saying rebuild. Yeah, how do you think for that, you know, it's a shared issue, I mean, how do you justify that?
Well, once they came up with guaranteed replacement, you could almost put any dollar amount, like very few homes can maybe build ultimately for what they're paying for, it's always one. But guaranteed replacement is what we go to, as long as that box is checked, we're good.
then on our end, probably know this, maybe do not, like every company has their own replacement cost estimator. Looks at square footage, materials used, quality, all those types of things. And it factors in all those things essentially, plus what's the general labor and material rates. I can tell you right now, they're extremely high for new homes, which everyone knows. You know, a nice home 10 years ago, price per square foot, like a really nice home was probably $150 a square foot. I think just average builder grade construction now is over 200 a square foot. And custom can be literally any, I mean, as much as you want to spend. Most of our systems are using about $200 a square foot, $250 a square foot for replacement cost. It's kind of what we see. We have enough contractors, we kind of talk to them as well, just to see what they're seeing on the building side of it, and that's generally where they're coming out to, so. Your average 2,000 square foot home in a nice neighborhood with vinyl siding is probably gonna have a replacement cost of 500-ish, I would say. We're seeing a lot of that.
One quick question.
Yeah.
Back to the roof thing.
Yeah, sure.
How does metal roofs play into that?
Metal roofs are kind of a different animal because they're longevity. They don't really leak, and some have almost 100-year lifespans or whatever. Most companies for metal roofs don't have ages on it. As long as it's-
Somebody told me there was like a 25-year limit on the, like they charge different, I guess. after 25
I'm
years.
sure there are carriers that do.
Okay.
I'm sure there are, but most carriers for metal roofs either don't have an age, or it's in good condition, let's say.
Yeah.
That, we love metal roofs, and generally the pricing on a metal roof is less because they're just much less likely to have a claim.
All right,
Thank you.
Cool.
helpful? Yes, yes, all right, thank you, John.
Yeah,
So
no,
much. Thank you,
appreciate it,
thank
guys.
you, appreciate it.
Thank you.
Yeah. Up next. Who's this Megan?
Shannon, just a warning, my kids are up there.
I have to go back to. Get there before.
I just didn't want you to, you go up there and you're a little surprised. I don't know what's going on.
I'm gonna see if I can get your number in my phone.
Thanks.
Yeah.
Yeah, thank you, thanks.
Hey, Rob, I just wanna make sure this like,
Guys, are you ready to get into the exhilarating topic? Of understanding express from confidence as it relates to what you all do, okay? I do not profess to be an expert in this space, but this is what I know, and this is what will help you guys when you're dealing with an estate, as part of the transaction. So I included this in here too, because we've been seeing, I actually had an agent come to me about a POA issue, power of attorney issue. So there's two different types of medical, usually advanced medical directives, and then there's financial ones. So, can that person sell the house? Okay, and I say that's important because I recently, had an inquiry about where one was revoked and whether settlement could proceed. So it's very important that you make sure that the person coming to you has the authority to sell that house. Is it a valid POA? Is there someone challenging it in the family? Usually it's a family member of some sort. Is that person incapacitated but lucid enough that they can go to an attorney's office and be like, I want to revoke the POA? Things like that. So just something to keep in mind. I thought it was important to include in here today, not only, in addition to, estates and trust. So, all right. On a basic level, there's two types of ways people die, either with a will or without a will. So when they die with a will, it's called testate. And is there a challenge to the will? Someone might come to you and say, hey, I'm the executor, I have this, I want to sell this house. But if they're ongoing litigation because whoever was appointed the executor is being challenged, or there's something else being challenged with the estate, or they're challenging the will itself in totality and whether or not that property can be transferred, things that you want to consider in that. And the will dictates how the assets will be distributed among the beneficiaries outlined in the will. Okay? So when someone dies without a will, it's called intestate. Okay? So when they die without a will, there's statutory provisions in Pennsylvania that govern how the assets are distributed. And it's kind of convoluted, but we'll go through it. So just some provisions that wills generally include, the appointment of an executor or an executrix, and an alternative one. So say, since that person, executed their will, the person that they appointed as the executor died, they have to have a backup, okay? Usually there's, an outline of payment of debts such as, and funeral expenses and taxes outlined. How does that person want those to be distributed? To whom and how real and personal property is to be distributed. Does Sally get the house? Michael gets my car, things like that. And if there are minor children involved, if, in the event that both parents, die maybe in a car crash at the same time or something like that, guardianship for minor children can be a part of that too. So, like for instance, my parents, and when I'm 3.5 years older than my sister, their will provided until my sister turned 18, I would have been her guardian once I was 18, so things like that. All right, so intestate without a will is guided by statutory provisions. I'm gonna stand up here because this is our so if there is a surviving spouse of the decedent, which is the individual who passed away, so if there are no surviving issue, meaning no kids or parents of the decedent, okay, then 100% of the estate goes to the surviving spouse. If there are no kids, but there are surviving parents or parents, the first 30,000 of the estate goes to the surviving spouse plus 1/2 of the balance of the estate. Okay, it's like a maze. You kind of know what this looks like. If there are surviving issue of the decedent, meaning they're surviving children, all of whom are the children of the surviving spouse, the first 30,000 of the estate to the surviving spouse plus 1/2 of the balance to the estate. And then if there are surviving issue of the decedent, one or more of which are not the issue of the surviving spouse, so they're stepchildren maybe, then 1/2 of the estate. Okay, so honestly, whenever I had something like this come up, I always had to look up the statute because it's not easy to remember. All right. So if there's no surviving spouse, this is the order that the estate would be distributed. So First, it would be to the issue of the decedent if there's no parents surviving that decedent. Then parents of the decedent if there's no issue, okay? Brother, sister, and their issue, their kids, if no parent survives the decedent, then to the issue of the decedent's parent. Do you see how like this is like, you have to literally have a chart and figure it out, it's convoluted. Grandparents, if there's no issue of either decedent's parents, but at least one grandparent survives, then half to the paternal grandparents, or if both are dead, to the children of each of them. Like, we're really down the rabbit hole now, right? And half to maternal grandparents, or if both are dead, then to the children of each of them. And then aunts, uncles, and their children, if there's no surviving grandparents, then to uncles and aunts of children and grandchildren. And then if there's no one in that maze that qualifies, then it goes to the Commonwealth, the reverse sweep state. Okay? Usually there's somebody in there, but, when I was in private practice, I got down to like this level in one, cause I had a minor settlement for a guy that died on a motorcycle accident, and it was his father, but he's a minor, and we were down to this level of intestate, which broke your brain at some point. So it really does provide for every scenario, but, it's a little dense to get through. So probate in Pennsylvania. Probate is the legal process for administering the decedent's estate. It's not supervised in Pennsylvania, meaning a judge does not need to approve every transaction, okay? There are some states where an executor or an administrator has to go to the court every time they want to distribute assets as part of the estate. That's not Pennsylvania. All right. Probate when there is a will. So there's two kinds of wills essentially, one that's self-proving and one that's not. So a self-proving will, a will is self-proving if it's notarized and executed in front of two witnesses. So basically they're saying it's self-proving because two people saw it and a notary was there making that will valid. All right, so if it's not self-proving, two witnesses have to demonstrate that that signature on there is legitimate. So you find somebody who is familiar with the signature and they come in and they certify, usually to the court, that under oath, that is a legitimate signature. The executor or executrix, obviously executor if it's a male, executrix if it's a female, will be appointed by the court to administer the estate when there's a will. And then letters testamentary are issued to the executor or executrix to show that they have the authority to distribute assets. All right, when there's no will, an individual has to file a petition with the Register of Wills seeking appointment, okay? That doesn't necessarily have to be a family member. It can be somebody else, a family friend, but the assets will be distributed in accordance with the intestate statute, okay? So it doesn't have to necessarily be a family member. It usually is. So then again, letters testamentary are granted, and that allows the administrator or administratrix, which is a mouthful, to distribute the assets. And then they have to be distributed in accordance with intestate law. So in real estate transactions, how does that overview kind of affect what you guys do? Like I said before, if an individual has passed away, the first step is to confirm that the individual has approached you to sell the decedent's property, has the authority to do so, right? So whether that be a POA, whether that be an administrator, whether that be an executor, request a will, all documentation, letters testamentary, short certificate, death certificate, things like that. I think we all know right now in this era of fraud, it's very easy to purport to be someone you're not, and it's very easy for identity theft among the deceased. You know, they get their social, they get their information, they pretend they're them, and they transfer assets. So is this person who they say they are, do they have the authority to make this, enter into this transaction? And then if a spouse has predeceased, the decedent that owned your property, we will also request the spouse's death certificate, because we want to confirm that that spouse doesn't have an interest in the property. So if that spouse is still alive, they still have a legitimate interest in the property, and that executor can't, sell it without that spouse's approval. So, usually we see it where they're both, one spouse passed away a long time before, and now we have a recently deceased spouse, and, they're going to sell a property. So the inheritance tax, again, I don't purport to be a tax attorney by any means, so this is fairly general how I understand it in terms of what I do in my job. So this is a tax imposed on the transfer of assets of a deceased person. This includes real estate. So it's an additional tax. It's due and payable within 9 months of a decedent's death. And usually there's a tax attorney or an estate attorney involved, and the estate will apply for an EIN so they can file the appropriate documentation with the Department of State. And what we do with that is we estimate the inheritance tax at settlement, and we escrow it. And we estimate it at 1.5% of the tax, because we have to protect that property. If that inheritance tax isn't paid, it's a lien on the property, okay? So we escrow a little more than the amount, because we might have to retain an attorney to file it on our behalf to release the money from escrow and get it paid and get the lien off the property. Any questions?
I'll say, I'm working with Jim on one right now that we're gonna end up having to transfer. The guy potentially about to die, but I'll say, sorry. So I'll save this till the end.
Feel uplifting presentation. About that. Just another few things. So it's important, like I said, to confirm that the inheritance tax is paid, because it's lienable on the property. And you would hate for someone to purchase a property, and then someone goes back and says, well, there's this huge lien on it in the form of an inheritance tax. What's the rate? So this is just generally speaking, surviving spouse, there is none. But then you see it escalates up to 15%, heirs, nieces, nephews, cousins, and friends. So it gets, higher. I guess as you get more remote from the decedent, but still pretty significant tax. Trust.
Question.
Yeah.
Yeah,
Oh, yeah.
well, no, so, okay, so on this one I do wanna ask, so,
Mhm.
so that 15%, is that going to be on, like, what the house ends up just selling for, or are they going to end up having an appraiser go out at some point then and doing it on the appraised value?
It's on the sale card.
It is going to be on the sale, that's kind of what I figured.
Yeah.
Okay.
All right, so I have up here, you probably can't see it, but revocable versus irrevocable. So there's several different kinds of trusts, and they have served different purposes. And I think many of you were at the presentation we had maybe a month or so ago, 2 months ago maybe, where they talked about trusts and how there's certain benefits for some tax purposes, things like that. This is where with trust, the tax attorney is really key, because they can tell you, the best way to protect your assets and your taxes, not paying too many. So, first kind is revocable. So those are living trusts. They can be changed or altered at any time during, by the grantor, okay? So the grantor is the person who creates the trust. The pros about those, it's more flexible and it can help you avoid probate later, okay? But there are cons, and I don't know the ins and outs of the tax protection. I can't cite the code or anything, but there's not as much tax protection for that type of a trust, okay? And then irrevocable. Once an irrevocable trust is established, you can't modify or revoke it. That's why it's called irrevocable, which makes it a little bit more difficult to control, and one of the cons. So it's difficult to change things. It's kind of like once you make it, you're there, okay? But it does offer better asset protection and better tax advantages for the, the beneficiaries in it. All right, trusts, living versus testamentary. So living is created obviously during the grantor's lifetime. It allows for management of the assets while the grantor is alive. And this can assist in the transfer of assets, to beneficiaries after death, and again, potentially avoiding probate, which I think is the goal of a lot of trusts. Because you want to keep them out of those assets out of the estate, okay? Testamentary, it takes effect after the death of a grantor. So this is one that happens, someone dies and then this trust kicks in. And the good thing about this is that it can help take care of minors or individuals with disabilities, okay? So it's more of a, I don't want to say it, it's like a care trust, in a lot of cases. So, in these types of transactions, or if you're dealing with it personally, I think it's really key to choose the right kind of trust. And with the help of an estate and tax attorney, I think between the two of them, because obviously you want to know the tax implication and you want to make sure you're protecting assets. You know, you need to find someone that you trust to do that. And obviously there may be, you know, a financial planner involved, like we talked about at our last, presentation. But, you know, I think it's for anything here, you know, if you have an estate, if you write a will, if you have a POA, anything like that, you need to be comfortable and have an attorney do it. It's not great to have a napkin will. That's not gonna be self-proving when you go to the court, right?
So on the living versus testamentary trust, how does that differ from like a revocable or non-revocable trust? Or did I miss that because I stepped out in the call?
Oh, so you could have, so a revocable is a living trust, and irrevocable, they're just, what you can do during the time. So irrevocable, once you get into that, you can't change it. It's like set in stone.
I got you.
With this one, you can change, at any time. So, and then the other ones are like after death and before death,
Okay.
okay? So it's kind of like, what you can do with it, and then if you're alive or not, are the different kinds. And I say, as I said in the beginning, I think POAs are important too. Anecdotally, I just had a family friend that got really sick really quickly with dementia. They didn't have a financial POA, and she couldn't make any financial decisions for him, including, you know, property, selling their house, anything, until they had to get, you know, you had to have a competency hearing, everything. So those are just things I think, just personally even, and as you, deal with clients who may have, mental or intellectual disabilities too, that it's important that they, you know, the person coming to you to sell a property or buy a property too, has the authority to do that. Some other types of trusts too, a special needs trust. So a lot of times, say somebody a minor is injured and they, get a large settlement, they'll usually get a special needs trust established for them, that they can't access the money, until a certain period of time, or if they need significant medical treatment, they can only access it for those purposes, and it has to be in a certain type of interest-bearing account. It has to, you know, there's really strict rules about how it can be distributed, okay? And then other ones are charitable trusts, so you can donate to a charity, or say, you know, I want X amount of my estate on every month to be donated to this charity, and a lot of people with a lot of wealth do that. So those are just other little types of trust that you can go into. I kept this very basic because I didn't know how deep you guys wanted to go, but does anyone have any questions? I feel like I'm just talking and kind of boring you to death.
As somebody who has parents that are aging, they're in their seventies, I will be the executrix when they both pass. Their house is currently in both of their names. Do you recommend, I know you're not like a tax attorney, but do you recommend that while they're still, you know, good health, good sound mind, that we put this in some kind of a trust? Like, would that help me down the road as far as we're paying taxes and?
I think potentially, I think it depends on what their financial condition looks like and what assets they would want. I hate to give out the lawyer answer, but yeah, I think I can't answer that honestly. I think it would depend on what an estate attorney would tell you.
Okay.
cause it's different for everybody when you get to enter into that, you know, if they have other assets that could affect, things like that.
I have a CPA and a tax attorney all in one, if you need a referral.
Okay.
Yeah,
And that's,
they kind of work in tandem with each other.
like, it's one and the same,
Yeah,
so it's one-stop shop.
yeah. Very well. Any other questions?
It's either quiet or hot. Because if I open the doors and.
Can you send this to us? Would you be willing to send?
That's a good idea.
I love
Thanks, Amy.
From a title perspective, do you just need the short cert then?
We usually ask for, we get all of it. We'll get a short cert, we'll get a death certificate, and we'll get a will. Just to make sure that there's no funny business going on.
Okay.
It just protects us too, to make sure that.
I sent you an email this morning, because we have the short cert, but we
Yeah.
don't have the death cert. We didn't want to, it's a recent death, so we didn't want to bother. You didn't need it.
Yeah, we don't necessarily need it, but we like to have it, because like I said, it just protects us from potential liability to it. You know, fraud or whatever, I don't know. But yeah, it protects the person selling the house too, that they have the authority to do it.
I mean, this is gonna be a very stupid question, so,
That is a good question.
well, hold on. So I guess all of this is that basically we're gonna have a situation up in Vermont here very soon. I guess, I assume that the vast majority, if
Yeah,
not
this
all
is
of this is all. Okay, yeah,
I cannot vouch
Practice
for
up there,
being
yeah,
a
right.
Vermont attorney, or that this resembles any part of Vermont law.
yeah, I just didn't know how much of it would actually,
I mean,
I guess, carry over. I imagine probably a decent amount, but.
yeah, general
I'm sure there's-
concepts, I think they're gonna want those same documents, however their
Right.
probate system works. They probably have the same types of trust, but there might be different tax implications or, different rules or statutes that govern them. So yeah, I think, is it a property that you're selling?
Not as of right now.
Okay, I would probably get a Vermont attorney involved too, just
Yeah.
to say, hey, is this legitimate, or how can we do this above board? I don't know what their inheritance tax situation looks like there. There might not even be one there. I suspect there is, because that's like an easy way for the state to make money.
Bernie's there, he's probably got an inheritance tax.
I'm sure that's okay.
Are Ben and Jerry there too?
Ben and Jerry are there.
Yeah.
And some of it would go to the indigenous people, I imagine.
Yeah.
Sorry. What else did I wanna, yeah, so I mean, honestly, as long as somebody can pay off the mortgage, we probably recommend transferring title before a lot of this happens, or I guess what would you?
No, because I think that's where tax implications come through, right? You transferred it to your son or your daughter,
Do a family.
or if you do it jointly, things like that, like, that's not, there could be worse tax implications than just an inheritance tax, depending on how you own it.
Even more so than I fit, well, yeah.
Well, there could be capital gains taxes.
Right,
So capital gains, and I might be wrong on this, but if whomever owns it bought it 50 years ago for $10,000 or built it, so that's what the capital gains tax would be. But if you take it into your name, the capital gains tax will be on the current value.
so this one that we're working with Jim on, they bought it like 3 years ago, and it
Minus
kind
the
of bought it
basis.
for $8,000.
Minus the basis.
Minus the basis.
So, yeah. I mean, I did the same. I put my mother's house in my name 6 years ago, over 6 years ago. So when she dies and I sell that, I'm gonna get hit with capital gains.
Yeah,
But I knew that going in. I just wanted to protect the house just in case I had to put her in a nursing home, they didn't come and take it. It gave me better control.
mhm. And that's kind of.
So that was
I think
kind
where
of a
the-
choice that I made.
Yeah,
Yeah, and I think that's where also in the state, attorney and even like a healthcare or Medicaid attorney, because Medicaid's always looking for a payout on a lot of these things. So if you pay for care, or if they're Medicaid eligible and you're paying for care, you sell an asset, they're going to come find you to pay off,
They're gonna,
pay Medicaid,
well, yeah, they go back 5 years.
right?
Ask me how I know. Feeling it now.
But that's also just something to consider too. Will there be implications with even Medicare or Medicaid too, depending on the situation?
Right.
Good conversation.
I thought it might be a little crickets in here because it's not exactly. So
It's really not
talking
that,
about
it's
the-
not that difficult. You just need a good attorney to.
You, that's what it is.
It really
You
isn't.
do, and you just need to make sure you're updating your documents
The
too.
more money that somebody has and assets, then it just gets a little bit more complicated, but
Yeah.
it's just not that difficult.
Yeah, for somebody, for somebody in the room like Andy that's been doing this for a really, 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 really long time.
Mhm.
It's easy, right? And yet, we do have, we do have some newer agents in the room that this is like,
Well, you should do
Wow.
this, you should do this on your own.
Yeah.
Period.
Yeah.
You hire an
Yeah.
attorney.
and that, yeah.
Well, I
I mean,
think it's important to update too. You might do this and then 10 years pass and your circumstances change or another person in your will dies or passes away or,
Yeah.
you have another child and that's not,
Yeah, you have to update,
how
you
does-
should update your wills also, if you have one. I just updated mine, sitting on my desk, I don't know if to read it. None of you are in it.
I don't get the dogs.
No, not you, sorry.
Oh.
Not this time, I took you out.
now for what you guys do, it's just particularly important, to make sure that person is who they say they are. Cause dead people are the easiest people to steal their identity.
Where's Mike? Didn't we just have a situation like that?
Yeah.
Where somebody claimed to be somebody that was dead and trying to sell a property recently?
Yeah.
Yeah, so I mean, it's,
That just
when you
happened.
think about it, it's just, you can probably Google half the information and get it and make a sale, so,
Yeah,
even when someone living goes to, you sometimes have to make sure they're not dead instead. It's almost the reverse,
yeah,
but,
yeah, that happened. Isn't that weird?
yeah, I think it's just important to make sure, cause obviously you enter in a transaction and there's something, an issue with an estate or who had the authority to sell it, that's gonna affect title to the property down the line. And, I'm sure that buyer's not gonna be happy when they're subject or drawn into a lawsuit because, so-and-so didn't have the authority to sell this property.
I think from our side, just knowing what somebody needs to sell the property is helpful.
Yeah,
We just had a woman whose husband passed, like we know her, we knew her husband, we knew she had the right to sell this home, but
Mhm.
she had a will and he bought the house 56 years ago, the year before they got married.
mhm.
And it was only in his name and he had a will leaving her the house and she thought that was sufficient and it's not.
Mhm.
So
It's not.
it's not. She had to go to the courthouse to get a short cert and
Yeah. And I mean, when you think about it, the main goal is just to prevent fraud, right?
If I just went through that, my attorney, to make sure that if I kick the bucket tomorrow, automatically everything goes to my wife. She doesn't even have to open up an estate. The way we get
yeah, I
started.
don't know, she did have to go open.
I
up
think
a
it really
estate
depends
account.
like on how the will's worded.
So,
and
yeah,
typically,
Yeah, that had been something worded differently.
well, when you think about it, they were married how long and they might not have updated wills for a significant period of time, that it might not have been the most.
Could be just like.
Or
Right.
a bad attorney when you wrote your
Yeah.
will that didn't.
Right,
inform
exactly.
you how it needed to be written.
But that's not bad, so she gets the short cert.
So she had to go open a bank account and go to the courthouse to establish a trust and get a short certificate and then make an account in the trust name.
Yes, so she basically had opened an estate.
Yeah, but that's all stressful when you're now like,
You think it's gonna be a
we didn't know until she's under contract,
Yeah, we
so
did
it's
read
like,
it. Yeah, sure.
yeah.
Was it just not enough just on the real estate, or was it on all of the personal property? Was the will just
That was
not,
before I got.
like, so she had to go get the short cert for the real estate?
Mhm.
Was the will not enough to, I guess, to move over all this personal property to her as well, or was it just on that?
All we did was help her sell her house.
Hmm.
I don't know.
Yeah, you almost.
Any other questions?
Well, not now.
Thank you.
Don't go anywhere.
Good job.
Don't go anywhere.
If you guys need a state attorney recommendations, I have several
if you need